Ladies and gentlemen, welcome back for another week of the Fairfield Financial News Podcast. My name is James Protonentis, and I'm joined here with my co-hosts,
Andrew Miller
and Jonathan Vicenti.
All right, let's get right into the market recap of the week.
All right, so this week was pretty rough on the markets. The Dow Jones Industrial Average closed at 37,986 points. It decreased 0.23% this week, and its year-to-date performance is an increase of 0.8%. The S&P closed at 4,967 points. It decreased 3% through the week, and its year-to-date performance is an increase of 4.1%. The Nasdaq closed at 15,282 points, decreased 5.5% this week, and its year-to-date performance is an increase of 1.8%. And oil prices closed at $82.13 this week, decreased 4.1% through the week, and its year-to-date performance is an increase of 14.6%. All right, so in recent weeks, we've seen a noticeable shift in market dynamics following a substantial 25% increase in the S&P over the last 6 months. This trend has reversed somewhat, with the S&P closing lower for 3 consecutive weeks and the Nasdaq closing lower for 4 consecutive weeks. This current pullback has seen the S&P 500 retreat approximately 5.5% from its peak, while the Nasdaq has declined around 7%. More interest rate sensitive sectors like small cap stocks and real estate have experienced even steeper declines. Concurrently, the VIX Volatility Index has reached some of the highest levels that we have seen so far this year. This heightened volatility stems from a combination of factors. Market expectations for Federal Reserve rate cuts have been scaled back a lot. Now we're only anticipating 1 reduction in 2024, adjusting to a sustained period of higher interest rates. Additionally, escalating geopolitical tensions, particularly in the Middle East, have pushed up oil and commodity prices. Additionally, while S&P 500 companies are generally surpassing first quarter earning forecasts, their future outlooks are less optimistic than anticipated. The forthcoming earnings reports from mega-cap tech firms like Microsoft, Google, and Meta are highly anticipated as of now, as investors seek indications of potential weaknesses. Despite the recent downturn, such market corrections are common and typically range between 5 and 15% annually. The key question here really is whether this pullback could evolve into a more severe or extended bear market, characterized by a loss of 20% or more. However, the probability of such a scenario is currently deemed pretty low, especially given the underlying strength of the U.S. economy and the robust consumer demand and a stable labor market.
So now that we're in earnings season, a lot of big companies are reporting their earnings, and we're seeing a lot of ripples around the market. So Goldman Sachs beat their earnings per share estimate by 33.42% and beat their revenue estimate by 9.67%. This was due to a surge in trading and investment banking revenue. Additionally, United Health Group beat their earnings per share by 4.32% and beat their revenue by 0.5%. Despite fallout from a cyber attack on its subsidiary Change Healthcare, it still reported better than expected revenue for the first quarter. Similarly, Johnson & Johnson, both in the healthcare industry, beat its EPS by 2.28% and missed revenue by 0.01%. They pretty much stayed exactly where estimates thought, and it's really showing a rebound in demand for non-urgent surgeries among older adults who deferred the procedures from COVID. Bank of America missed earnings per share by 2% and beat revenue by 1.7%. Revenue slipped due to net interest income declining from a year earlier. Morgan Stanley had a great earnings, beating earnings per share by 23.82% and beating revenue by 5.29%. They beat these due to increased revenues and profit from wealth management, trading, and investment banking, beating their expectations. ASML Holdings, a Dutch semiconductor company, beat earnings per share by 11.55% and missed revenue by 2%. So Peter Wenick, the CEO, called 2024 a transition year for the company as they begin to modernize their semiconductor company and look to really cash in on the current hot heat of the semiconductor industry. Next up, Taiwan Semiconductor. They had a great earnings report, beating by their earnings per share by 5% and beating their revenue by 1.4%. It's their world's largest producer of advanced processors and counts companies such as NVIDIA and Apple as its clients. So it's a strong demand for AI chips that is leading their growth. Netflix beat earnings per share by 16.21% and beat revenue by 1%. They added 13.1 million subscribers during the fourth quarter, which puts them at 260.8 million paid subscribers. And this massively beat Wall Street's expectations for their growth. Finally, Procter & Gamble, they beat their earnings per share by 7.5%, but missed revenue by 1.2%. Its sales disappointed, even though it reported quarterly earnings that beat Wall Street's estimates. So in the upcoming week, we're going to see a lot more of these big companies report their earnings. Companies like Visa, Tesla, Pepsi, Verizon, Meta, Thermo Fisher, IBM, Microsoft, Google, Merck & Company, Exxon, Chevron, and AstraZeneca are all going to be reporting their earnings. We should especially look out for Microsoft, Google, and Meta, as they have been dolls in the market carrying the S&P recently. And these reports will let us know if the Magnificent Seven can continue to carry the S&P to new highs.
All right, you want to get into Super Microcomputer?
Yeah, so Super Microcomputer dropped, I believe, 20% on Friday. 23%, down 214 a share. And this wasn't on news of a bad earnings report or anything like that. It's because in 7 of the last 10 quarters, they've report preliminary earnings when announcing the earnings call. But this quarter, they decided not to. Now, it is expected by Wall Street that this is due to very disappointing earnings and that this is going to cause deep downtrend because their earnings are going to be much worse than what people are really pricing in and expecting. But if they chose to do it for another reason, like delays in their own accounting or something like that, this could be a great opportunity to buy in low because this is a company that we've seen massive growth. I mean, year to date, they're still up 150%, despite being down over 500 from its peak. It has capitalized on the AR market, and I believe it is going to still be strong in this market, despite even a bad earnings report.
So have they cited any reason for why they haven't released it?
No, I believe they failed to comment or chose not to comment.
I'm not terribly educated on the semiconductor industry, if I'm being honest. So, how has earnings reports been looking for that sector?
It's been pretty good, actually, especially with NVIDIA. If you've seen, they massively have great fundamentals, always meeting expectations. I'm reading an article here. It says that this could be a great time to buy Super Microcomputer because there's, from the price 686 to 789, there's a huge support window. So this could be, an opportunity to really buy that support level. But we'll see. Maybe it'll break below it even more.
Yeah, I mean, I don't know. I'm always looking to buy companies at a good discount, man. I mean, this seems like a prime opportunity, I mean, there's no real reason cited for this, them opting not to release these early. And when you look at other earnings reports within the sector, I mean, there's no real reason to not believe that these earnings are not sufficient or beating expectations. So, yeah, I mean, I would say I'm on the side that, there's a good opportunity to buy a good company at a discount price.
Yeah, I mean, we don't know for sure what the real reason is. It could be something, small or a big situation where maybe they don't want to release terrible earnings. But I do think overall it is a good company. So if you do want to buy it at a somewhat discount at the moment, it could be a good buy.
Well, we already saw ASML Holdings, which we just talked about. They did miss revenue by 2%, and they are in the semiconductor industry. And people are expecting SMCI, Super Microcomputers, to have crazy earnings. Their growth has been exponential, honestly. So, I mean, even just like average earnings could cause some panic as this growth isn't as unlimited as people have been thinking, basically.
Yeah, well, either way, I mean, companies miss earnings report every now and then, But, I mean, that's not a real indicator of the long-term earnings of a company. So, I mean, either way, I mean, even if their earnings reports fall short for this quarter, I mean, who's to say that, it's still not a good buy at this moment,
Yeah, I mean, I'm sure it is. I'm just saying that there's a lot of growth priced into the stock that if this earnings indicates that the growth may slow down, it might be a long road back to where it's at.
I mean, if you really look at it, even with this drop, this 20%, whatever it was, drop from the past week, super microcomputer is still up nearly 150% for 2024.
Wow.
So, I mean, this is just a slight pullback from what we've seen the past year, if you compare those two metrics.
And if you even take it back further to 1 year from today, it's up 600%.
Wow. Yeah, I mean, so like you said, I mean, 100% growth is priced into the stock, but I mean, even with a poor earnings report this quarter, I mean, there's definitely, this is a fast-growing company and it's showing really no signs of slowing down,
Yeah.
I think there's got to be a bounce back here. I don't see it being just fallen,
Exactly.
So I where that support is, this article says around 709, 615, wherever it said. It could be lower. Nobody really knows for sure, but we are going to see a bounce back. Stocks don't just move one direction,
Exactly.
Unless you're Peloton, then you're never recovering.
All right, so moving on, in these past couple of weeks, we've seen a pretty sharp increase in oil prices, and this, of course, has resulted from the Israel-Iran conflict. So, in recent days, it has seemed as though Israel and Iran have attempted to de-escalate their military confrontations. However, global financial markets are still responding pretty heavily to this conflict. Following the Israeli airstrike late Thursday night on an Iranian airbase and nuclear facilities, oil prices saw a stark increase, disrupting market stability just before the trading day began in New York on Friday. This incident contributed to an increase in the S&P 500 and Nasdaq Composite Indices' longest daily losing streak in over a year. The oil market volatility adds another layer of complexity for investors. After Thursday's airstrike, global benchmark crude oil prices jumped from under $87 a barrel to nearly $91. However, they settled back to $87.29 by the end of Friday. This was enough to slightly boost the S&P 500 energy sector, which has been the only sector in the index to show an increase within the month.
In other news with oil, Portuguese energy company Galp announced that a field off Namibia could potentially contain up to 10 billion barrels of oil, which marks a significant find in global oil markets. And this increase in supply can also be reflected within the past week, with oil prices being down around 5%.
Yeah, so I mean, we're really going to have to see where these prices go. I mean, it's still only the first quarter, so there's a lot of, a lot of news to break throughout the rest of the year. But I don't know. I'm pretty confident that it'll return to reasonable prices. All right, so news segment, the Fairfield Financial News Weekly Movers. This is a segment where we look at the stocks that really defined markets this week. So yeah, let's dive right in. All right, so Tesla's stock took a hit as it announced a significant workforce reduction of over 10%. Elon Musk plans these cuts to curb costs and boost productivity in response to dwindling electric vehicle demand and contracting profit margins. Despite Tesla's struggles with its first annual drop in quarterly deliveries since 2020, shares slipped 2.7% this Monday. All right, so the second stock is Samsung. So the battle for supremacy in the smartphone market saw a new twist this quarter as Samsung dethroned Apple, becoming the top smartphone seller. Data from International Data Corp reveals a 9.6% drop in iPhone shipments year over year, with Samsung stepping up to recapture the lead. Despite aggressive marketing and financing strategies from Apple, its shares fell by 2.2%. The third company is Live Nation. Live Nation's merger with Ticketmaster continues to stir controversy. The Justice Department is gearing up to launch an antitrust lawsuit against the concert promoter, spurred by a malfunction during a Taylor Swift ticket pre-sale last year. This legal challenge claims that Live Nation has stifled competition in the ticketing market, leading to a 7.6% drop in its shares. Moving on to Netflix. Netflix's latest financial disclosures revealed a mixed bag. While the crackdown on password sharing led to a substantial increase in subscribers, the company's revenue projections fell short of expectations. This news pushed Netflix shares down 9.1% as it plans to stop reporting subscriber data altogether next year. And finally, United Airlines showed resilience with a significant jump in first quarter revenue, despite a recent grounding of Boeing MAX 9 jets affecting its earnings. The airline is adapting by planning to lease Airbus planes to offset delayed Boeing deliveries, boosting its shares by an impressive 17%.
I want to go more into United Airlines because I find it interesting that, I mean, their stock increased by over 10% due to the strong earnings forecast, despite all the controversy going on with Boeing. I mean, what do you guys think about that?
I think it's crazy. I mean, when you have companies that are so interdependent, where United flies a lot of Boeing aircraft, and Boeing is just seems unsafe at this point to fly in, to still be able to grow 17% is very, very impressive.
Yeah.
I think some of it has to do with, I think you're going to talk about this a little bit, but I believe Boeing is going to be covering all expenses associated with their Airbus or the Boeing Max planes being grounded.
So there's that, and also tying back to the whole Israel-Palestine conflict, United Airlines has had to cancel flights to Tel Aviv until May 2nd due to security concerns, which also reflects the geopolitical influences on operational decisions. And United Airlines is also leveraging AI technology to enhance operational efficiency and customer service, indicating a forward-looking approach to industry challenges. So perhaps, like, I know there's also talks of maybe flying cars. I don't know if you guys heard about that
I did.
recently. And I know Boeing is looking into that too, maybe like a Airbus taxi kind of development.
I think I saw that they like invested like $500 million into a flying taxi company, and then I think they just bought it out too. So like they've been running that for a while. So I don't know. I haven't seen a lot of progress like just being reported or like a lot of coverage about it. But I mean, if that comes to fruition, that could be very, very.
I mean, it's interesting because I don't know how the airlines can really tie into that. Is it going to be a Boeing exclusive, or is it going to be more?
I mean, I would think it's going to be a side venture because there's no point in doing a flying airplane or a flying car long distances, really.
Yeah.
You know, like you might as well just take a plane at that point. But like in like New York City, where you can now get like maybe 3 levels of traffic, alleviate like a third of the traffic at each level, that could be really
innovative and like all that.
I'm thinking of the word. It's like
Lucrative.
Lucrative, very lucrative.
Yeah. I mean, I also want to see how AI can tie into all this and make these these flying cars autonomous. Maybe AI technology can aid with that, and that's what perhaps United Airlines is researching on.
Yeah. Well, I gotta say, just the fact that United Airlines is using AI is like a really good indicator, because I feel like airlines as a whole are kind of an antiquated business, like not antiquated business model, but like they're sort of in the past because there's nothing really they can keep innovating when profits are going down, revenues are going down because they have to keep competing in a very competitive marketplace. And especially a company like United Airlines, which has a lot of controversies and seemingly has a lot of customer service problems, to be able to use like AI in that kind of spot, that can be really helpful to maintain customer relationships that continue to benefit you as a whole.
So wait, does it say specifically what this AI is being used for?
Operational efficiency and customer service.
Oh,
so,
awesome.
Yeah, I mean, who knows how far it would actually go, like replacing pilots, that could disrupt the industry.
Phew.
I mean, that would really be huge in, it could have negative and positive consequences for the sector as a whole, but I don't know. I mean, if it's just customer service, that would be really good, for people looking to have questions or maybe rebates, etc.
Yeah, it helps them develop their customer relationships, which are the most important thing in business. Where like if you can keep your customers happy and keep giving them what they want, they're going to be much more willing to come back and keep spending money at your airline, especially when all these airlines are becoming much more competitive in pricing.
At the same time, the majority of airlines, if I'm correct me if I'm wrong, are unprofitable.
I mean, so it's weird because in the last earnings report, I'm seeing a lot of unprofitability. Yeah. But then, like, looking deeper, it's like I haven't found an answer.
I don't know. These last, like, couple years have been all over the place. Like, specifically JetBlue
Yeah.
has been like up and down.
With COVID especially, I mean,
yeah.
you see the companies in this sector that really are recovering and some that are lagging behind and struggling.
Yeah. Well, I think it's really interesting how they're using the AI. Like you said, Miller, like it's always good to see companies, adopting new technologies and seemingly antiquated industries. And I've been seeing a lot of companies moving towards AI customer service. Most recently, I remember logging on to Chegg and having a customer service question. It's run through like the first like preliminary question is it's run through an AI bot. So yeah, I mean, I think it's very interesting how we're seeing a lot more companies employing AI for things like that, but also for operational efficiency. I don't know exactly how it's being used for operational efficiency, but I'm hearing that like a lot more companies are moving on to employing AI for that reason. So it's very interesting seeing how different industries are adopting to AI technologies and employing it for their operations.
You never really think about it, but across different sectors, AI can be implemented, in a variety of ways. So.
Yeah.
And so just to go back real quick just to what Jimmy said. So the profitability of these different airlines has been a lot worse in recent memory. JetBlue is struggling a lot more than most other companies. They've been unprofitable since 2019. I believe Delta is still profitable, and United Airlines is still profitable. But it goes to show that, like, JetBlue, which was, I mean, I had good experiences on JetBlue. I thought they were good enough. They did the job. I didn't have any reason not to like it. And the fact that they're unprofitable now is kind of crazy. But, I mean, in a market as competitive as airlines, it does make sense that some are going to be losers,
Do you guys want to go into buy, sell, hold?
Yeah, we can go. All right, buy, sell, hold. I have 6 stocks for us today. First up, Super Microcomputers. What does everyone think? Following the no preliminary earnings, what do you guys?
I say it's a hold because it's hard to tell where it's going to go from now, but I think it will bounce back in the near future. And if you have a long-term perspective, I mean, especially with the semiconductor industry, and I think Super Microcomputer is a powerful force in that industry, that it is a hold. I would even say, I would go far as to say buy, but if you're an investor that perhaps is risk averse for like short-term swings because it could continue going down significantly, I wouldn't advise it, but if you have a long-term perspective, I would say buy.
Yeah, I would say buy. I typically think very long-term when looking at companies. Yeah, I mean, like I said before, there's no real reason to think that its earnings will fall under expectations that much, even if they do. And I mean, when you're looking at the company, its growth in the past couple of years has been pretty astounding. So, I mean, I feel like that growth is going to continue to happen, but who knows?
I mean, so I also think it's a buy. I think that just like its overall business model is so like strong and solid based on the AI craze and the AI boom and the fact that AI is not going anywhere, that I think it's going to be a profitable company and a growth company for years to come. Okay, so next I have United Airlines. Personally, for me, I think it's a hold. Nothing that's been happening is telling me that it's going to have like tremendous growth opportunities, but there's also nothing that's telling me that I should sell it right now.
I would agree with you there. I mean, yeah, pretty much exactly what you said. I feel that this news is coming out. Well, it is good news. I don't think it's going to have that significant of an effect on its long-term earnings that we're going to see a big boom, just a general increase in its stock price in the future. So I would say hold. Definitely not a sell for me, but definitely not a buy.
I would say hold as well. I mean, from what we've seen, it's been performing pretty well in the recent few months. I think that it's probably one of the better companies in the sector. So if you want to diversify into that sector, I'd say that it's a pretty good bet.
Yeah, I mean, United Airlines seems to be the leader in this in airlines in America at least, and like it's continuing to be profitable despite this like problem with Boeing and all the other things. So it's showing some resiliency. So I think if you wanted to buy, it's a solid choice. Netflix. Personally, I think it's a buy. I mean, we've seen that Netflix is a giant in the market, and there was some fear because of people sort of like just getting bored with what they were seeing on it. But I mean, the recent strategy to acquire new content has been super successful, and they're now able to keep continuing growing their user base just after, I believe last year was the first month where they lost users, and now they're growing right back up. I think they've jumped right back where they were.
Mm-hmm. I think we did Netflix a couple episodes ago.
We actually did Netflix last episode, but but now the earnings was out.
Yeah.
So.
Yeah, I mean, it beat its earnings by a pretty good amount. I would say it's a buy for me, just because I think, where it stands now, there is a lot of growth opportunities for it. It could grow its revenue streams by a lot, I feel. But also, I mean, with its recent crackdowns on password sharing, I think they said they were going to slow it down after this first quarter earnings report. I could be wrong about that. But, I mean, look, while we all hate that, it's really helping to blow up its user base, really helping its earnings, helping its stock price subsequently. So I would say, again, I would say buy, but it's not like a full-on, buy, just because, you never know what the future holds with these kind of companies. I mean, back a few years ago, honestly more, I mean, you would think that, Netflix was going to reign on top of the streaming industry forever. And, now look at it. So I don't know. I would say buy, but it's not a full-on buy for me.
I think Netflix is a buy. I mean, we're seeing it. I think, from what I said before, it is the powerhouse in its certain sector, the entertainment sector. I think it is, at the moment, outperforming company competitors like Disney. I'd say if you do want to diversify into the entertainment sector, Netflix is also a pretty good bet. So and I do see, growth opportunities in the future.
So next, I have Taiwan Semiconductors. So for me, I think it's this one's tough for me because I think it's either buy or hold. I'm in between them though, because while I see that it is well poised to grow in this market, it is becoming a saturated market. There are a bunch of companies that are all sort of trying to do the same thing, revolutionize AI chips. Taiwan Semiconductor, I think, is the biggest producer of these smartphone chips. I mean, so the largest producer of advanced processors and counts and is supplying to NVIDIA and Apple. So I'll go with a buy, but it's also a very competitive market. So if they start losing these contracts, then they could see some losses.
Mm-hmm. I'd have to agree with you there. I think it's a buy. While the market is becoming oversaturated, you do have to take into account the barriers of entry into this market. I mean, the average Joe just can't start up a semiconductor company. So I feel, and with their recent growth and their expected growth, I feel like it's a good buy. I'm not too worried about the market becoming too oversaturated, because when you look at it, I mean, this is a company that has very good footing in that market, and when you look at the barriers of entry into this market, I feel like they have a good moat around them, that their future earnings are pretty well guaranteed for the long term.
Mm-hmm.
Yeah, I mean, there's significant growth in this industry. I think that Taiwan Semiconductor is a major force in that industry. I'd say it's a buy for now. I mean, we're seeing some pullback in the recent couple weeks, but I think that it is a 5-year hold.
Mm-hmm. All right, that's all we have for today. Thank you all for listening. We hope you enjoy your week, and we hope you stay informed.
Bye.
Yeah.